What retail concept traders saw in GU right now compared to what smart money and institutional traders saw in GU. Alright guys, so today's going to be another one of those what would retail do in this scenario compared to what smart money and institutional traders would do. Before we even get into the video, we need to have a moment of silence because liquidity gang, we have achieved our goal. One of the main goals for these videos that I've been doing are to get retail concept traders to think just a little bit differently, just to think outside the box a little bit. And you know, potentially you might want to come over and start doing the institutional vibes. So I just need to share this win with you guys. A retail concept trader contacted me and said that they had caught the same move that I did. They used all kinds of engulfing candle action to catch that trade. In other words, look, I caught the same move as you. I'm retail. A week later, after being exposed to my content, they came back to me and they said, looking at price from an institutional and smart money perspective, it really does help you see the charts in a lot more cleaner light. So we just have to give a round of applause for the gang. We did it, gang. We did it. For the retail concept traders out there, there's nothing against you guys. This is just me sharing this stuff in an entertaining way. But hopefully you guys can stomach this and eat this. If you can stomach what I'm about to say, you're going to get some good nuggets from this video. What did retail traders see in this piece of price action right here? Last time I did this video, they were like, it's a blatant downtrend. Obviously, we would have been looking for sales at the time. And so look, I'm going to give you guys the benefit of the doubt. We are on a 4-hour time frame now. We can see that GU is dropping. This is the portion of price that I'm going to be looking at. I'm going to be looking at what people are doing beneath this low. So what do retail traders like to see? So what I want to do is I'm going to throw in some annotations that retail concept traders are most likely to draw up on their charts at this time. So we just added on some support and resistance lines. You guys know what's happening here, support and resistance. I'm not going to explain it. Beneath this low, what retail concept traders are taught to do is that when you get a breakout, especially of a swing point, you should continue to trade in that direction. Retail concept traders love a breakout trade. They're looking to trade beyond here, and what they will normally do is they get super aggressive beyond the breakout and they start selling. Whenever price is beneath this low over here, then they're going to be aggressively selling because price is broken out of that swing point, especially the swing point. Price is broken out of that swing point level and price should continue to drop. Now what I'm going to do is I'm going to bring you to this piece of price action down here because we're trading beneath the low now. So this is where they're thinking to get super aggressively bearish. So you guys can see that I'm in a 50-minute time frame now, and now what I'm going to draw up is this. I'm going to draw up a little support and resistance level because this is what they would have done, because you can get multiple support and resistance levels on various different time frames. So I've just drawn up the 15-minute support and resistance level. This is it right here. You can see multiple touches down here, multiple touches down here. And when I zoom onto the right, you see multiple touches going on. You get rejections in here, rejections in there. You're getting tons of rejections. Look, rejections, all kinds of rejections for this level. This is a very strong support and resistance level. Price has tapped it so many different times. This is the way that retail concept traders are thinking. And then not only that, they get an extra piece of confirmation. What I'm going to do is I'm going to jot down to the 5-minute time frame to show you exactly what else they got that gave them the impression that price was going to drop from here. So I'm on the 5-minute time frame now, and I've just jotted up a head and shoulders pattern. This is one of the very first patterns that we learn. When price is producing a head and shoulders pattern, you better be on that thing. We got the left shoulder, we got the head, we got the right shoulder, and normally or generally the right shoulder is not necessarily higher than the left, but in this scenario it is. So how they're taught to trade this is that when price breaks out of the neckline, this is the neckline of the head and shoulders pattern. But the moment price breaks out of it, once you get a retest, you should jump in for a sell. And as you can see, I'm on a 5-minute time frame and there's been no retest. So what they're doing right now is they are anticipating a retest of this neckline and at the support level that they're looking to be resistance now. Okay, so they're looking for some kind of retest at this level to catch an entry, and their stop loss, if you're very aggressive, will be above the neckline. If you're a bit more conservative, it's going to be above one of these highs. And so let's just quickly get out the ruler tool. From the neckline to the very top, we're talking about roughly about a 30 pip stop loss. The person who's really cautious is going to have a 30 pip stop loss. Don't forget, we're beneath that low. Everything's pointing downwards. We're beneath the low. We got the breakout. We're getting rejections off of resistance levels, and now we've got a head and shoulders pattern with a nice juicy push lower. They're waiting for that retest at the moment. So now I'm going to show you guys what exactly happened when we got to this point. I've paused it right here now. You can see right here, we've come up to the neckline. So everyone who was waiting for this sell trade, they would have been tagged into this trade right now. Now I'm going to hit play to show you what else happened. So now I'm going to pause it right here. The people that jumped in with that closed stop loss, they might have been taken out with this wick up. They got a small push to the downside. And so that was roughly about just, I believe, under 20 pips or so. But I don't know who wants 17 pip moves, 18 pip moves and stuff like that. Generally, you want a lot more. People that entered in from here that didn't have a tight stop loss, when price got to roughly about 20 pips, they would have moved their stop loss into profit, or some of them wouldn't have. Some of them would have held that position and said, you know what, 20 pips ain't enough for me. I want to move it when it gets to 50 pips or so. And not only that, this big push down would have been some kind of engulfing candle on a higher time frame than this one. This is the 50-minute time frame now. You can see this is a massive engulfing candle. It's engulfed roughly about 5 candles. This is a sign that price wants to give us lower prices. We got that engulfing candle, we got the neckline retest, we got the head and shoulders, but trading beneath that low is game time for the drop. I'm gonna hit play some more now on the 50-minute time frame. There we go. I'm gonna pause it right here. After price gave them the impression that price was gonna shoot lower, if you had closed off your position at that point, that's good for you. That's all blessed. I'm pretty sure a lot of these retail concept traders did not close off their trade. So as you can see, the high of that head and shoulders got taken out. And there's a reason for all of this, which is what I'm going to show you guys next. Here's what smart money and institutional concept traders would have been seeing on the chart. This is that exact same portion of price, but going right to this level down here where we are trading beneath this low. And one of the differences between what retail concept traders do and what institutional smart money traders do, when price gets beneath an old low, you're actually looking for buys. That's the difference. Instead of looking for sells because the price is broken out, we're looking for buys because ideally you're meant to be selling from a premium price and taking it into a discounted price. And so this is why I always say don't be super aggressive with your sells beneath these old lows, because the main part of the agenda is complete. The main part was getting beneath this level. So let's run it back now. So I'm going to put on some annotations to show you guys what I saw down here. There we go. So we got the lows being taken out. We've got this push lower. We've got a down close candle here now. Now I'm going to go down to the 50-minute time frame to show you guys exactly what I was looking at. Now I'm on the 50-minute time frame. I'm on the 50-minute time frame and I can see that price is violating up close candles. So normally whenever you see price violating up close candles, that's a sign to be bullish. We're trading beneath an old low and we're looking for price to get bullish now for some kind of retracement back up into a premium price. And so the moment price is violating these up close candles, this is the sign that price wants to turn around and start retracing back up to the upside. And so that means whenever price returns back down to a down close candle, this is where you should be looking to get bullish. This is where you should be looking to go long, because they return back down to these institutional candles to mitigate their drawdown positions. So what I've done now, I've just marked up the very high of my down close candle, and you can see right here price has returned down to this down close candle and then it's instantly going to violate an up close candle. And so in other words, we're looking to get long, we're looking to get bullish, we're looking to take liquidity on the top side. So now I'm going to bring you down to this portion of, now I'm going to show you guys the entry that I took to potentially run out the liquidity on the top side. So you can see now I'm in a 5-minute time frame. Beneath this level is our down close candle. Don't forget, we're looking to be bullish at this point. Price to return back down for mitigation. We're looking for price to come back down to this level again so we can catch an entry to the upside. Here's my down close candle. I'm going to go ahead and mark it up right now. So I've marked on my down close candle and I've moved it all the way to the right just so you guys can see whether it hits that point or not. And so now I'm going to go ahead and hit play. Don't forget, we are targeting the money. And then another thing we've seen as well is also these equal highs. So when price pushed up the first time, it produced these equal highs. So we have money up here. So there is liquidity up here. There's liquidity in the form of buy stops up here. We've got our entry point and we've also got our TP point, which is going to be above these highs. I'm going to go to the 50-minute time frame to hit play now. Now I'm going to hit play. Let's just go back to the 5-minute real quick. You can see that we tapped into that down close candle to the T. Yeah, our down close candle to the very T, as you can see. And now this is where we're looking to take price up. And just to put my entry on here so you guys can see what we were talking about, I actually entered a few times from here as well. So we had roughly about a 10 pip stop loss, and the targets were these highs right here. These are the targets because we know there's going to be money up there. This would be like a 1 to 9, 1 to 10 hour trade. So it would be a phenomenal trade. Now I'm going to go ahead and hit play again. I'm going to go to the 50-minute time frame. It's taking forever. And so right here, this is where they hit the neckline right here. This is where they hit that neckline. So I'm going to quickly put on here, this is that neckline right here. Obviously, we anticipate some kind of response off of this level because the opinion needs to be created that price is dropping from this level. And so this is why we don't panic when we see some kind of rejection from here, because we know that the opinion needs to be created that price wants to drop from here. There we go. And then this is where they fully run out the high. They actually tap above the high right over here, but they come back again for a full tappage, a full running of liquidity. So this is what smart money and institutional traders would have seen at the time. The main reason I decided to drop this video was to highlight the differences between what retail concept traders and institutional concept traders do when price is beneath an old low or an old high. Retail concept traders are taught that breakout trades are the best thing ever. And look, I'm not saying breakout traders don't work, but as long as you know where you are in price, you don't want to be super aggressively selling beneath an old low, and it's the same thing above an old high. If you're not looking to take profit quickly, then most likely your stop loss is going to be used for liquidity. So beneath an old low, you actually want to be looking for bullish signs to actually take price higher. And it's the complete opposite when price breaks out above an old high. You want to be looking to take your sells from a premium into a discount. I'm not dropping this video to take a dig at retail concept traders. This is more so just to highlight the differences between the two ways of trading. Hope this helped you guys. Peace.